Hi friends, welcome to FundEd360 English channel and I'm Professor Anup Matthew. Today's discussion is about the various taxation that involved in stock market trades as well as investments. A lot of us are very much perplexed as well as confused with the taxations that involved in share market trading and the income involved in that. Because when you go to your sub-broker or a broker or your accountant, three of them will tell different things. So a lot of people, they are very much perplexed with this. That's the reason why I thought to make a simple short video on that. We can broadly classify the taxation into four. So any of your trades will fall under these taxation schemes obviously. The first one is long-term capital gain tax. Second one is short-term capital gain tax. Third one is the taxation on speculative business income, and fourth one is the taxation on non-speculative income. First one is the long-term capital gain tax. So long-term capital gain tax will be invited if you buy an equity or mutual fund dominantly invested in equities and sell it after 365 days. And if the cumulative profit exceeds more than 1 lakh in a financial year, you are liable to pay 10% as long-term capital gain tax. It's very simple. Till 1 lakh, no tax liability. Anything exceeds 1 lakh, only you need to pay. So obviously you have saved 10% from that. That means 10,000 rupees you have saved if you invest for a long time. For unlisted stocks, that means if you are buying stocks like Reliance Retail or Tata Technologies, over-the-counter deals, if you are going for that. In that case, the capital gain tax is 20%. If you invest in a startup and if you sell that equity, then also that will invite 20%. For listed stocks, when you trade through a recognized broker and pay security transaction tax, then till 1 lakh, you don't have any tax obligation. Second one is the short-term capital gain tax. Any equity trade or mutual fund trade you have done and the holding period is less than 365 days. That profit will invite short-term capital gain tax, and that is 15%, irrespective of any other concerns. There is no exemption for that. It's 15% flat. So if you buy Reliance Industries today and sell that tomorrow and you got 1 lakh rupees as profit, then you are liable to pay 15,000 rupees as tax. Now you may think, what about intraday trades? Because that's also the holding time is less than 365 days. But you should understand one thing, that in intraday, you are not paying security transaction tax. So intraday trades falls under the speculative business income. It's not STCG. So speculative business income, that's defined as per the section 43(5) of Income Tax Act 1961. And this income will be added to your total income. So for example, if you are a professional and doing intraday trades, I mean intraday equity trades, not a futures and options, and your salary is 9 lakh and you made an intraday trade profit of 5 lakhs. So your altogether your income is 5 plus 9 lakhs. That's a 14 lakh income. That's your annual income. So applicable tax slabs will be there in force while calculating the taxation. That means after 10 lakh rupees, you will be taxed 30%. That's why usually we used to say you have to plan your tax also while you trade. The tax we pay, the trade we do, that should have a trade-off with the risk that you have taken. You have to always consider about the trade as well as the tax. Then only you can sustain in the market. Else the risk that you are taking may not be that much worthy. So currency trading also is being considered as a speculative business income, since that's involved no STT. The fourth type of taxation scheme is non-speculative business income. That's also defined as in section 43(5) of Income Tax Act 1961. What is the income from that? Even though you trade, that means intraday trade, do that on futures and options or commodities. Futures and options means irrespective of whether you are doing that in the stock options or stock futures or index options or index futures, all the income will be called as non-speculative business income. Now you may be thinking, why this intraday only being exempted? Though it's not that much explicitly mentioned why it's not considered under speculative, but the probable reason probably may be the futures contracts are generally meant for hedging the actual asset underlying. So that's not considered as a simple probabilistic trade. Underlying asset like index or stock, that means equity or any of the commodity that has been hedged with another future contract. Probably that may be the reason why it's not considered as a speculative business income. So here also you have to add the income with your other income, and that will be taxed cumulatively. One other important thing is it's your wish, it's your discretion to consider your income as business income or your personal income. But once you decide, you cannot change it. I will tell you what are the advantages and disadvantages of considering it as a business income and non-business income. If you consider that as a business income, the advantage is you can deduct all other expense that meets for that business. That means all your fuel expenses or office expense, everything can be deducted from that profit. But if that's an individual expense, if you are showing that as an individual income, you can't do that. The disadvantage is you have to use an ITR 3. For that, you have to seek the help of a chartered accountant. Next is about your losses. What happens if you incur any loss? Obviously, you can file your losses also, so that you can offset your losses against the coming year's profit. That means for the next 8 years. That's one advantage. The only thing is you can offset, you can deduct the speculative losses only against speculative gains. You can't deduct the speculative losses against non-speculative gains. That is, if you get some gain out of doing some F&O trade, and if you incur some loss for doing some intraday stock trades. More specifically, the F&O trades you got a 10,000 rupees profit, and intraday stock trade you incur 5,000 rupees loss. So you can't say that 10,000 minus 3,000 is your profit. You have to show that separately. Next year's intraday stock gains only offsetted against this year's intraday stock losses. So this carry forward set off of these losses for speculative business is just for 4 years, not for 8 years. Next is about how to file, which all ITR forms you need to consider when you file these taxes. One thing is about ITR 1, ITR form 1. If you just have salary income, rental income, interest from your FD, if that's the only income that you earn, then you can use ITR 1. Obviously, if the income is limited till 50 lakhs per annum. But on the other hand, if you have salary plus rental plus FD income and other capital gains, in that case you have to go for ITR 2. So if you are in stock market and if you get some capital gains, then in that case you have to go for ITR 2. Capital gain means that can be STCG, short-term capital gain, or long-term capital gain. Irrespective of that, you have to go for ITR 2. In case if you are declaring something as business income, in that case you have to go for ITR 3. In that you can show all your income, whether it's a business income or a salary or interest from FD, whatever it is. Let's recap this session. 4 types of taxes you can include. One thing is long-term capital gain, LTCG. If you buy some equity and sell it after 365 days, you will fall under LTCG category, long-term capital gain, and anything exceeding 1 lakh profit, it should be paid at a rate of 10%. And the second type is short-term capital gain tax. Irrespective of your profit, you need to pay 15% of tax. That means any equity or mutual fund that you hold and sell less than 365 days. Intraday is not included in STCG. Intraday is a separate income, and that's called as speculative business income. And the income from intraday, that means the profit from intraday, that will be added to your total income and taxed accordingly. Fourth one is non-speculative business income. If you trade anything other than equities, that means the commodity and futures and options, that will fall under non-speculative business income. That also will be added to your total income from other sources. So that's all for now. See you in the next episode. Till then, bye from Anup.